Welcome to the 33rd installment in Trading Strategy Guides Trading Education Series. Today we're going to talk about chart patterns. Hang around. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. Today we're going to talk about the final element of technical analysis, chart patterns. What are they? Why do they work? How can you profit from them? So what are chart patterns? In technical analysis, chart patterns are just price formations represented graphically. How's that for a clinical explanation? If you've followed this channel for a minute, you'll know that I use chart patterns every single day to get into some very profitable trades, like our current Bitcoin position. This is a daily chart of Bitcoin from this past Tuesday. That's November 24th, 2020 for you future people watching this video. I identified this pattern on the chart back in late September and bought the breakout signal on September 29th at about 10,840. You can see it hit our first target on October 10th. At that point, I closed half the trade for profit and set the stop to break even. The price on Tuesday morning was over 19,400, almost doubling our entry price in less than 2 months. I've got 17,610 locked in right now. Feel free to fact check all this information in my past videos. I trade these patterns on daily charts, so I only spend 30 minutes or so in front of the screens each day. If you want to do more work, these patterns can be well used on smaller time frames too. Chart patterns are without a doubt one of the primary tools in my chart technical analysis toolbox. The chart patterns are also a very popular way to trade any kind of market because the most profitable chart patterns give us a visual representation of the supply and demand forces. A chart speaks its own language, and it speaks it through chart patterns. And chart patterns leave footprints of the big money or the smart money. These footprints can lead us to highly profitable trades. If you remove all the indicators from the charts and everything else that might make your chart less clear, and just look at the price action, whether it's a 5-minute chart, daily chart, doesn't matter, whatever your preferred time frame, you'll gain more insights into what is actually happening in the market. When you look at this chart, experience will teach you to see the myriad of patterns here. At first glance, it may just appear to be random ramblings of price action, but once you start to develop the trader's eye, you can look at a chart like this and find all sorts of trade opportunities. And I even see a few more in this particular chart that could be useful. It doesn't matter what time frame or what market you trade because chart patterns are present everywhere there is a battle between buyers and sellers. There are all kinds of bullish and bearish chart patterns, and the cool thing is they tend to reoccur over time, making it possible to backtest them and find their probability of success rate. Now here's a list of quite a few price patterns that I have been known to use. There are many, many more than just these. And you might say, so big deal, there are a lot of chart patterns. How does that help me? Well, that's what I'm here to explain to you. Let's discuss how we can use the chart patterns and make money trading any market. Let's start with some chart pattern trading rules. Here's 5 step-by-step guidelines that would be important to take into consideration when trading any of the chart patterns. Step 1, always determine if the market is in trending or consolidating mode. This step is important because many of these simple chart patterns appear to be reversals, but they are actually continuation patterns of an underlying trend. For example, a bullish flag pattern is a pattern that forms after a larger move up, and the pattern itself is just a brief form of relief or consolidation from the underlying trend before breaking new highs. Basically, the bullish flag pattern is a continuation pattern. We can primarily distinguish 2 types of chart patterns. Continuation patterns, or those that signal the trend will continue, and reversal patterns, and those are the ones that signal the possible end of a trend and the start of a new trend. Here's an example of a reversal pattern called the double top pattern. The context in which you find these patterns is important. You must determine whether the market is trending or consolidating because certain patterns are totally meaningless if they are out of their context. And that's why this first rule is important. Be sure you understand the context of the pattern you're looking at. Step 2, decide what chart patterns you want to use. Do you like to trade reversal patterns, or are you more comfortable trading continuation chart patterns? Figure that out, and once you have decided which way to go, try to master that particular trade setup. I know you've heard Tim's trading maxim number 11, don't practice until you get it right, practice until you can't get it wrong. Repetition is the mother of all learning tools, and the more you trade the most profitable chart patterns, the better you'll become at spotting these patterns in real time. Step number 3, figure out what's the story behind the chart pattern. What you have to do here is construct a story behind your favorite chart patterns. Now, what does that even mean? Simply look at the whole price picture, not merely focusing on the chart patterns. What you need to see is that this story confirms your price action pattern. Everything else must point in the same direction as your chart patterns. For example, the narrative behind the bullish flag highlighted here is quite easy to spot. We're moving in an uptrend because we have developed a series of higher highs and higher lows. Secondly, we broke and closed above an old high, and there's no resistance spotted above the market price. These are all good ingredients that speak volumes in favor of our bullish flag pattern. Step 4, trade the chart pattern in confluence with good price location. Chart patterns work best in conjunction with a good price location, which can add confluence to our trade. What do we mean by price location? A price location is just an important area on the chart from where we would normally expect a price reaction. That price location can either be a support or resistance level, swing high, swing low points, pivot points, even technical indicators if you choose to combine the two. For example, the price channel pattern highlighted here worked out because we had confluence with the higher time frame resistance level. The Euro USD was simply trading in an upward channel but heading right into a resistance level. And step number 5, make non-subjective trading rules for trading these chart patterns. The last step to build a chart pattern trading strategy is not just to have some non-subjective trading rules, but you also have to write them down and follow your plan strictly. There are many possible ways a trader can profit from these chart patterns. For example, the bullish flag pattern can be entered either at the retest of the flag support or at the breakout above the flag. Become a master of only one setup and one chart pattern trading strategy. Prove to yourself that you can be profitable trading one pattern before you move on. So, find a pattern that you like and become very good at trading that chart pattern. At this point, I could load you up with facts about trading patterns, but the one thing I can't give you is screen time and experience. That's something that you need to gain over a period of time. When it comes to chart pattern trading strategies, there are no magic bullets because you're going to make mistakes, and secondly, you'll still be having losing trades. Yeah, even if you do everything right, you will still have losing trades. That's part of your job. These patterns are not like crystal balls that tell you exactly what the market is going to do. What they do is signal a high probability setup that typically does what is expected of it. That means that sometimes it doesn't do what's expected of it, and there's no signal that will keep you out of those trades. That's why trade management is so important. Identify a point at which your trade is most probably not doing what you intended for it to do, and shut it down at that point. Figure that out ahead of taking the position. Don't try to do it while you're in the trade. That's the worst time to make decisions about your position. Map out all the possibilities in advance, backtest all those possibilities to confirm they are profitable, and then follow your rules to the letter when you're in an actual trade. And that's it for chart patterns this week. Since this is a holiday week in the US, I'm going to skip the Dream Trade segment of today's video. My Garmin position is still languishing, but it's locked in at plus 10% profit, so I'm letting it go for now. But I won't be taking any more positions this week due to the low volume of trading. Come back Friday for my strategy of the week and next Monday for my trade pick. And don't miss the next installment of the Trading Education Series next Wednesday when we'll move on to the strategy module. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great holiday this week, and I'll see you on Friday.